begins. It is December 15th. Friday, I got back. I've probably been doing about 3 hours of research on the first company. I started with uranium, the commodity, and vanadium, the commodity, but Energy Fuels, UUU. Um, they have a really good cash balance. They're in probably the most secure spot, and they're really conservative as far as management's concerned. I really like that portion. They have a lot of pipelines of projects. They have the La Salle, which is also related to Western uranium. So they're looking at 4 million pounds of uranium or vanadium production in the next 2 years, basically. So that's quite encouraging with the current price. And it sounds like they're going for that two-year period, 16 to 18 months, they say. Um, One really interesting thing that I read in the 10Q, and I'll have all this on the spreadsheet with detail, but they said they didn't anticipate when they're looking at the debenture bond through Wyoming. They said they don't anticipate the price of uranium going beyond $55 a pound through December 2020. So that's really interesting. I think the best target here, I have it set at 42. I think they're saying 40 to 50 range is pretty steady currently. And then probably in 2021, we'll see the real crunch too. Who knows what's going on. But currently, they say there still might be some secondary inventories out in the market and not enough supply constraint. So they currently produced about like 600,000 pounds this year. Um, and a lot of it, 340 of it was from tailings actually. So they just had them sitting around in ponds and they basically underfed alternative feeding material, just rotated that stuff around, which is the easiest. They didn't have to produce, but looked like they had this year really interesting, pretty good margins. Their cost was about 21.92 on average, and then this is the last year they said that they actually have contracts. So that'll all be ending in 2018. Then they'll be completely unhedged moving forward. But those contracts were for a blended price of $53 a pound, right? So that's almost like a 50+% margin. And then they still had a lot of operating costs, $10 million in salaries, which is a problem. Then they took a $7 million impairment and permitting cost. And then they also, of which I think about like 4 million was related to a purchase of a royalty on the Alta Mesa project. So they bought back oh no, maybe it was Nichols, but one of the projects they bought back 6 to 8% royalty that was on there. So they now have a lower cost of production on those projects. So yeah, they're making all the smart moves. They paid off Wyoming debt, and they raised $44 million in open market purchases, which they're authorized to release 50 million shares to raise money. So they released 20 million for $44 million US. So there's still 30 million they have outstanding, and they listed their acquisitions, and there's just a long list of acquisitions. Uriners was the most recent. Mestania, really interesting. One of the board members is on that, and I think that's where they're actually buying the royalty from, if I'm remembering correctly. And then Strathmore they bought, Denison, the White Mesa Mill they bought, and they actually had a few more than I originally thought. And then, so yeah, they're pretty active. I think the Western is a huge possibility here. They're saying they're opening the mine, which is what George is doing, same thing, and reviewing production basically in December for the next 2 years of vanadium. And they said they can recover 4 million pounds in the next 2 years. So that's really encouraging. As far as the balance sheet, very positive overall. They have, I think, 20 million basically sitting around in cash. Um, and then they're looking at very little debt. It's all in long term basically. They paid off all their short term debt. So now there's about $16 million that they have set in reserves for cleanup. And I think that eventually has to get to 43, but it's on basically a standby for the next, I think, 5 years they have. So eventually that's going to come to bite them. As far as warrants and dilution concerns, they will say they'll make acquisitions based on share price. So there's possibility there. Warrants are great. One's expiring, I think 1.3 million is expiring on March 30th, 2019, and the strike price is 345. So we'll see what happens there. And then they have another one that's like 245 that's in 2021. So that's almost a guarantee. But other than that, on the balance sheet, just a ton of properties. I think like the cost basis is sitting around like $40 million for Nichols Ranch and then Alta Mesa, and then just material, property, and equipment that they have sitting around. So I guess they're pretty conservatively leaning. And if I had to put my, overall risk-free cash into a company, I think Energy Fuels looks very attractive as far as having options, having cleanup, having just being able to run underfeeding at low cost. But the risk here is they're going to have to sell in the spot market. So they sold 100,000 pounds at the end of 18 out of desperation, it appears, for basically $22 per pound. So at this point, they are going to suck cash for the next year until prices recover. So even even this large of a current producer is just burning through cash. So risk there, but overall, it was a great company. I don't have the ending comparative Veritas number, but once I have it all in there, I will have that. So long night of studying after work, but very, very interesting. They have their management discussion analysis is just very rigid, very little elaboration, and it's moderately complex comparatively. So they don't elaborate very much, but I'm excited to move on, especially the year end. They say a lot once they have the 2019 budget, but it doesn't seem like they're going to be very aggressive. So I don't see huge amounts of growth. They're cutting off all permitting, stopping Nichols Ranch wellheads at 9. And I love the CEO, Mark Chalmers. All right, have a good one.